Good afternoon, traders. Today is Saturday, May 6th. What you're looking at is May 3rd. FOMC 9:31 p.m. tweet I sent out where I was identifying the higher low notches here and a double bottom notch here. Created there and there. This was before the Thursday and Friday move, and I said I'm seeing a higher notch bullish divergence. MACD is still double bottoming at the negative 14 line. This is SPY Futures 1 hour chart. The uptrend line is negative 14, by the way. And look what it has been doing. Pivoting above the negative 14 line there. And then here. And double bottoming again here. And it shall come to pass. We know what happened on Thursday and Friday. Okay, so today's episode, we are looking at SPY's final stand on the rally. And I believe it will come this week. We are going to get that elusive August 19th SPY 421 gap. I think it's going to get there this week. It intentionally did not get there last week. It only took back the April 18th high, but still making a higher high, and I'm going to show you all that in a minute to show you that I think it's going to get there this week, finally. And then finally, I'm going to be able to show you that secret bull market trend once it gets to SPY 421, but we got to get through this week first. Today we're also going to talk about Dixie, the dollar, the weakness, the VIX pivot. I think VIX is going to pivot this week. But that's only because SPY will be finished with the rally. So VIX is going to probably pivot, but it will be a controlled sell-off into May, not a crash. And then finally we're going to look at XLF to round up the week. Okay, this was Friday, was it not? What happened there in pre-markets, and then throughout the day, finished pretty much at session highs. I tweeted on that Friday, yesterday. Well, it appears the February 2nd, well, actually, oh yeah, February 2nd, 418.31, which is obviously higher up. That prediction was early. She's going up. This was on Friday when I tweeted this. Perhaps CPI next week. I think that's what's going to happen. Okay, so I tweeted this at 2 o'clock, 2 p.m. on the 5th. Yeah. Could finish at session highs. All right. Let's rewind to Wednesday FOMC on May 3rd, right here, right there. Okay, so this was the morning of FOMC, 8:42 a.m., 12 minutes after opening bell. The main thing that I called out, that I saw the possibility of, it's the 65-minute has a positive cross on the MACD here, right here. Basically, this is opening bell right there. See that? See the positive cross right there? And do you see the higher low on the RSI here compared to where it came from? Okay? Now, it's still below the zero line. However, so always be aware it could curl down at any point while still below the zero line. That's exactly what happened right here. Down. Okay? So, I tweeted that out 12 minutes after opening bell on Wednesday, FOMC day. And that's exactly what ended up happening. Now, the 195 MACD barely crossed below the zero. Oh, right, yeah, right. Where are you? Is this? No, this is the 65-minute. I was just commenting on the 195, but I didn't show that here in this tweet. The 195 barely crossed below the zero line at negative 0.02, so you need to keep this in mind. So that explains the collapse. Now, let's get over to the next. Okay. For you newer viewers, January 29th is when I put out this episode calling for SPY 421. It's going to finally come to fruition this week, I believe. And let me show you the evidence why I say that. Okay, first of all, you're going to see another tweet in a minute. I do believe this week is probably the last stand, the last week of this rally that started mid-March right here. This week, it's going to go up there. It's going to hit at least 418.31, but I think it's going to go higher than that and hit 421 right here, which is the August gap. Now, I believe we are at point equivalent to point A in February here. Why do I say that? Because as I was calling attention to last week, or last week and a half or so, that for 1762 right here, which is obviously below 418.31, which is the February 2nd high, 417.62 was the April 18th high. Okay? It's right in here somewhere. Now, look at the pattern. Up, higher low, higher high. Here, higher high, higher high. Once you made the higher high, you now have permission to go down to make one more last stand, one last time. Here to make an even higher high. And then that will be the end of the road. The reason why I say that is equivalent to point A here, because look what happens. Up, here, higher, 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 down, highest, and then it's over. We are not at point B because we are not at a higher, lower, point B is a lower high than this, than the 2-2 high. Lower high than this. Notice that the 2-2 high was the peak. It comes down, then up to make a lower high. We went down, up, higher high, down. Now we are going to make the last up move. That's why this is not point B, because we don't have a lower high yet. We have just finished the down move that bounced off. This is the daily EMA 50. See that? Look at that. Boop. Bounced off the EMA 50, daily EMA 50. Wick up. It's going to make one more move up, guys. Last one. Last call. This is the last call. So we are not at point B. We are at point A, equivalent to point A, because we have not made a lower high yet. This move is just the beginning of an up move. Now, this is equivalent to December right here. See that? That's December 14th. This is December 1st. Up, 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 down, up, then down. Look at the daily equivalent. It went negative cross, down, 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 flatten out, one more up, and then it went down. See that? See that? Look at the negative cross. Down, down, down. Flatten out. Oh, try to go up one more time. Then down. Look where we are. Down, 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 up, and then down, down, down. We're going to have one more up, and then we're going to go down. This is the last leg. Okay, so for all the bears who say, oh, I told you so, we're going to crash. No, actually, this is just the logical conclusion of a rally that happened since mid-March here. This is the logical conclusion. Okay? Further evidence. This is the logical conclusion. This is the 260-minute, 65 minutes times 4, 260-minute chart. There's the hive. Ooh, look at the 422. Look at that. Higher low, guys. Yes, sir. Negative 179 here. What day was this? For late April. I can't remember what day this is. 403.78 was the low on this day. 403.74, slightly lower low. However, bullish divergence MACD, negative 158 compared to negative 179. Higher low bullish divergence. And now, this is the 260-minute chart, guys. You have positive cross as of Friday. See that right there? Oh, yeah. Look at every time you get a positive cross. It's just going to continue. Okay, so, yep. We're going to have one final move, guys, this week. This is the final move. This is the final move. The 418... Oh, yeah, this had to have been... No, hold on. This is 418. Yeah, this is 418. This was the previous high. That is a higher high, right? Then you went down. Now you're going to go up and make an even higher high. And that's the end. That's the end of the road. Weekly chart, check it out. Look at this. Up, 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 shallow pullback, up, shallow pullback, up, down, wick up, down, supposedly a down week, wick up. Look at that. Wick up, wick up. This week's it, guys. But what I think is going to happen, yes, sir. I think between Monday and Wednesday might be the final push. It might be because that's CPI. You're going to see one more time, one last spike, and then it's going to look like by the end of the week, probably, it's going to look like a. It's going to look like. Here we go. It's going to look like a wick down, a wick down. So it's going to push up to 421, wick down, red candle body down by Friday. So it'll be a red candle body. It will not look like this wick up this coming week. It's gonna be a wick down, red candle body down here. Beginning of the week, it's going to surge up. End of the week, it's going to go down. But only after it finally makes the higher high. At the very least, it's going to take out that 418.31 high right here. And then it's going to fill that gap at 421. And then it's going to come down. That's what's going to happen, guys. That's exactly what's going to happen. You just mark my words. SPY futures. So, here, let me, I think I got a tweet. Yeah, here we go. 3 days ago, I tweeted this out. Negative 20 is the bear line. We're nowhere near negative 20, guys. We're all the way up here. Okay? Negative 14 is the uptrend line. Here's negative 14. See that? Boop. Double bottom. Triple bottom. Up. The uptrend is still alive. You're nowhere near negative 20. In fact, you're all the way up in the positive. In the 14. Plus 14, not negative 20. So you're not going to dump. Okay? So, that was just a nice little trickaroo that you went up here and took out the 418 high right here. Made a higher high compared to, the previous 418. Well, actually, this is 418 right here. Made a higher high. Then you went down. Now you're going to go up even higher. Okay? Very clever. I like that. That's very clever. So, because I haven't been day trading lately, I've been forced to kind of look more macroscopically. I'm starting to see these trends like that. So actually, it's helping. It'll help with the day trade because it helps you anticipate what's probably going to be the next move. and not look only specifically intraday, right? Because intraday can be too much detail, where you need to look at the macro picture, like what we're looking at now, to tell, oh, this is probably going to go down. See, so this is actually good. I haven't been day trading lately. It forces me to look more higher level to see these macro patterns. Okay. So let's see. Here's I said this 2 days ago, the day before FOMC Wednesday. I said this right here. That's a sign the rally is on its last legs. It really is. This week is it. This week is it for this rally that started on March 13th. Okay, this week is it. We're gonna hit that peak, and then that's it. Okay, I'm not gonna go as far as say by Friday it's just gonna crash all the way down to SPY 396. Nah, I don't think so. It's not gonna be like that. But the overall downtrend backtest leg of the rally will start this week. It will start this week. Okay, so there you have it. That's macroscopic. Let's talk about the dollar. Oh. And once again, since February 18th, when I put out this episode, this is nothing new. Look at this, look at this, look at this. This is the end of this week, this past week. Look at that. Wick down, candle body down. That's after FOMC. So I also tweeted earlier that, let's see if I have it here. Here we go. Yep, futures consistent with. It's got the 4 hour has a negative cross right here. That negative cross on the 4 hour MACD, that's significant. That's significant. That means it's got some serious weakness, right? And that's consistent with what we have right here. Okay, so and this is the weekly chart, by the way. Okay, so the 65 minute. When was this? This was right here. This was FOMC May 3rd. FOMC May 3rd, 9:55 before FOMC's 2 p.m. 65 minute. Look at this. Look at this. Down, 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 down. It's just weak. It's just weak. So, all right, we all know what happened. So there you have it. Okay. I just want to point out that for the first time, well, maybe not the first time, or well, I'll just say for the first time in a long time, both SPY and the dollar went down. They were not inverse. They were consistent with each other. They went down on FOMC. Both of them did. In the past, we all know dollar went up, SPY went down. But this time, they both went down. Okay? Oh, yeah, the VIX. Okay, here we go. This is the weekly chart. I just want to point out, here we go. This is the weekly. A few episodes ago, maybe 2 or 3 weeks ago, I said, yeah, I think I'm going to give VIX the benefit of the doubt. I don't think VIX is going to go all the way down here. It's going to kind of stop somewhere right in here, and then it's going to go back up. So it stopped pretty much right here, and then it's going back up. But that is to coincide perfectly with SPY's last stand this week. See what I mean? So there you have it. It is VIX going to be coming back. But don't get any illusions, you guys. Don't get any illusions, you hooligan bears. Don't get any illusions. Oh, it's going to go VIX 35 all the way up here. No. This will be a controlled sell-off in May that simply backtests what it gained in March and April, and it will still make a higher low when this is all said and done. Okay? You're going to get suckered once again. And I can't wait for us to hit SPY 421 when I can finally show you hooligan bears what I saw in early February when I tweeted that out and said, you guys, this is a hidden bull market. And you're going to find out. I'm going to finally show you the secret. XLF. Not bad. This is the weekly chart XLF. Look at this previous low, negative on the MACD, negative 0.57. Negative 0.55. Oh, higher low. Oh, there's your notch. There's your notch. And this is how the week ended. Down, higher low, wick up. Yes, indeed. Okay, so that's XLF, guys. So much for your so much for you hooligan bears who oh so hoped for the global financial crisis 2008 redux part 2. Nowhere even close. Nowhere even close. Here's your 2008 that you thought was going to happen. That only made a higher low here compared to here. Whereas in 2000 in March 2009, it went all the way down here and bottomed. Oops. But instead, we made a higher low here compared to there, and now we made a higher low here compared to there. Oops. So, XLF, we have the 195-minute. This is interesting, guys. This is a 195-minute chart. Still below the zero line, but clearly separated. Look at this. Up, 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 up. Consolidate under the 195-minute EMA 50. Guys, that's bullish. That's not bearish. That's bullish. What I've always been saying. Look at that. This is classic. Classic bullish. Okay, so we're going to keep that in mind. And, oops, what do we have there? That's actually all I've got for you guys. Feel free to follow me on Twitter, where I have been, not so much recently, but I have been calling out intraday tweets as the market has been trading. Don't forget to listen to your favorite music while you are trading. It helps you get in the right state of mind, helps you get into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000 signing off.